We did it.
Very nice. What you got going on over here?
Well,
Oh, it's not one of those touch
no matter how many times you touch my computer, my computer won't turn to a touch screen.
Fair enough.
I was just hoping we could see it going live on here.
Maybe the refresh button. I don't even know.
Maybe. Oh, look. It is us. So we're live. And if you know
it's
me,
behind.
Yeah, they always are. So don't look at this one.
Okay.
If you know me, I'm one of the least techie persons in the entire world, and so we are giving this a go. And I guess we'll save it, post it again, see what happens. But yeah, we just had a lot of fun last time doing our show, so we thought we'd continue it and go forward. So here we are. We are going to go over mortgage lingo. It sounds a little boring because it is. So we're going to break it. It won't be boring.
Never.
That's why we're going to break it down. And it'll be a good time. First, can I acknowledge your haircut?
Thank you very much.
I like it. I didn't know it was going to happen. Not that you have to run haircuts by me, but I was awfully surprised when I came in because
it's all shortened up.
It's all shortened out.
Well, my wife prefers it shorter, so that's what we do.
I like it. I like it when it was like a little crazy, like Einstein-y.
It was a little fun. Hey, you know what? Oh my God, that's so freaking awesome. So one of my favorite quotes from Albert Einstein is, if you can't explain it simply, you don't understand it well enough. And
that's perfect.
Yeah, that's so awesome. That was totally organic.
If you can't explain it simply, you can't explain it at all.
You don't understand it well enough. Let's jump into the questions.
Okay, let's go. Let's go. So it's on that. And I realized last time we didn't do an introduction. If you don't know us, I'm Emily. This is
Michael J. Barnes. I go by MJB or Barnesy, whatever. Call me whatever you want.
He's our loan officer here, and I'm his hype girl. And so we're coming to you.
Yes.
All right. Are you ready?
Yes.
So I want you to try as hard as you can I'm going to give you a word. I want you to explain it in about one sentence, right? So we're not doing paragraphs. We're not doing run-on sentences. Explain it in one sentence, and I want you to break it down so simply that my 7-year-old can understand it.
Totally fine. I love that. Where's your 7-year-old right now?
She's at school being a good girl, so she's not ditching today to be on our show, but maybe one day she will. All right, first word.
Okay.
Lender. What is a lender?
A lender is kind of like an all-encompassing thing. A lender is really like an entity or the entity that provides the money. And so I work for a lender. I'm actually a loan officer or a mortgage loan originator. But the lender is, in this case, as a mortgage bank, or in some cases, it is. It's always a mortgage bank.
So. Okay. So I don't think my 7-year-old will know what an entity is.
All right. So I'll be better with the next one.
Okay. Do you want to do lender again, or you got it?
Yeah. No, a lender is basically the person that provides the money, and in this case, to purchase a home.
Oh, see? There you go. Now you're in the swing of it.
Okay.
What is a mortgage?
Mortgage. Well, basically it is a debt that is attached to real property. In America, that's how it works. In parts of America, actually, in some parts of America, we don't use mortgages. For instance, Arizona, we don't have mortgages.
Right.
They're actually deeds of trust.
Right.
But we still call them mortgages. So basically, it's a loan attached to real property that you pay forever. That's what mortgage actually means, is till death.
All right. That was a good one. A little run-on sentencey, but you got the point across. Which I guess you kind of explained it in the last one, but short and sweet. What is a loan?
What?
What is a loan?
What is a loan? What is a loan?
Yeah. Somebody's like, did you get a loan for your house? They're like, what's a loan?
Wow. Okay. So that's hard to.
Is it borrowed money?
Yes, it's borrowed money. Yeah. So to get what
easy and simple, a loan is borrowed money.
Yeah, I need to get a loan. That means someone needs to lend you, give you money, borrow you the money.
Okay.
It's properly said.
Okay.
So yeah, and then you pay them back with predetermined terms.
Right. This is a little bit self-explanatory for the next one, but a buyer is simply
the person that's purchasing the home. In the case of
and then First time buyer, is it exactly that? It's a first time
So
person
no,
buying a home?
that's great. So there's really the true definition of a first time home buyer is someone that has not owned real property in the previous 3 years. That's technically
I didn't know
the
that.
definition of a first time home buyer.
Oh.
Yeah, so you could have owned a home 3 years and 1 day ago, and you are considered a
So
first
3
time
years,
home
the clock starts again.
buyer.
Okay.
Yeah.
All right. What is a pre-qualification? Sometimes in the industry you hear it called as a pre-qual.
Right.
Break it down simple.
Well, pre-qual or pre-qualification is really a document that you're given by a loan officer or a lender that basically says we have checked, validated the information that you've given us.
So pre-qual is an okay to buy a house.
Yes, it's an okay to buy a house. It's not a guarantee, but yes.
Okay. Conventional loan. I know we kind of touched on this in the last on the last video, but conventional loan is.
So a conventional loan is traditional. Conventional and conforming are not exactly the same thing, but they're kind of the same thing. But it's a loan that is traditionally it's backed by Fannie Mae or Freddie Mac, which are quasi-government agencies, and so the designation of a conforming.
So
loan.
conventional. So what I'm hearing is conventional loan is the more popular loan.
They are currently the most popular loan. Fannie Mae and Freddie Mac is lending out more money than most other entities are.
Okay, perfect. FHA loan.
FHA stands
And FHA stands for
Federal Housing Administration, and that is a loan that is backed by the federal government. And the mortgage-backed securities are sold differently. You don't need to get into that.
Okay.
I don't think. Yeah,
Nope.
That's
good. That's simple. Done. FHA loan, federal housing. Okay, VA loan.
VA, I have no idea.
Okay.
Sorry, a VA loan is Veterans Administration. That's what VA stands for, and it is reserved only for people that have served in one of the 5 branches of the military. And by the way, if that's you or your family, thank you very much.
Thank you
for that. VA loans are almost always the best way to go if you have access to utilize that benefit. It's one of the best benefits.
So if you got it, use it.
Oh, almost always you would use it. Almost
Okay.
always, yeah. Even if you have money to put down, we can talk about that some other day.
Yes.
Yeah.
Okay, interest rate. Next word.
Interest rate?
Yep.
That is the. Oh my God, that's a great question. I know, of course, what it is. How
do you explain it so simply without going into your
But before
lingo?
I explain that, how about I explain to you what chocolate tastes like?
Oh, is it kind of like you can't explain?
No.
Oh,
No, the interest rate is the determinant that the lender, the person going to be lending you or borrowing you the money, the interest rate is what they use as their yield or their payback in addition to the principal that's borrowed. I think that's good.
I think that's really
great.
good.
Oh, okay.
Yeah,
good.
no, you did a good job. What about term?
Very close to a perm. So a lot of times they put this chemical.
Rhymes with. My hair looks very permy today. I got one of those like 80s crimpers.
Oh my God, like Monica in Hawaii.
Yeah, exactly. We're friends. Fans over here.
Yeah. So the term is the amount of time the lender chooses to lend you the money, or you as the borrower determine the term that you want to borrow the money for. Interesting fun fact. You do not need to have a 30-year term. We actually do loans to 5 years, 10 years, 11, 12, 13, like pretty much any year between 11.
Because I think a lot of people are used to hearing that 30-year, right?
Yes.
Like that's the one that gets thrown around a lot. So
yeah, a 30-year loan is a great loan to have, and it works great for a lot of people.
Okay, we have that one. What about credit score?
Oh, credit score. Wow, that's goes back to the 50s. A credit score is a number assigned to persons, pretty much everyone that has a Social Security number should fall into a bucket that'll have a credit score. and the credit score is determined by an algorithm based on not only your history but your current pay status and a few other things.
Yeah, sorry, I need to turn those off because they're kind of distracting. All right, what about loan to value?
Loan to value, LTV,
Mhm.
you know, everything has an acronym in the mortgage
Yes,
business.
oh my gosh.
So loan to value is basically the amount of the loan to the value. So in simple terms, if a home is worth $100,000 and you have a loan for $70,000, that would be a 70% LTV or loan to value. So that's the loan to value is the percentage of loan to
All right, we're almost there. What about assets?
assets. That basically refers to, well, in the case of mortgage lending, the monies that a person has that can be validated or verified in some sort of an institution, traditionally in a bank or not savings loan, but a bank or credit
So
union.
assets is the money that you have that you can prove.
That we can prove.
Prove. Okay.
Yeah.
I like trying to break it down after I hear you explain it in
yeah.
not a very simple way.
I'm sorry.
No, it's good.
I suck at this.
That's what happens with people in their industry. They talk like they're talking to people in their industry. So that's why I wanted to do this, is to be able to break it down, because some people and a lot of first-time home buyers are younger generations that don't understand all of this lingo. And so here, let me help you understand and help you then get into a home.
You know, and I want to say something on that, because when this generation, the younger generation, which is actually kind of my favorite, because they really do care. They really want to learn. They're a little bit, it seems like, timid. And so they want to do so many things like electronically, basically in text. And so much is lost in communication. So we try really hard to do, we do video. That helps. We try to get on the phone to help explain these things. But this stuff really matters.
It matters a lot.
This shit is important. And then all of a sudden some, jackass loan officer working for some loan teller, whatever, sends a 21-year-old kid all of their loan documents, 120 pages for them to review on their little phone. I mean, that's just complete horseshit.
Right.
So when we get a chance to do fun things like this, I want to bring value.
Yeah.
And I'd rather you just call and so we can talk about it.
But this one you can share with your friends and review it and let us be a resource for you.
Yes.
Okay. What about a word that we threw around last time and that you're hearing a lot? It's sort of slowing down, but refinance, which also you can hear it shortened as a refi.
Mm-hmm. Well, so, oh my God, that's like we could do an hour on the subject, but simply put, a refinance is really like refinancing a mortgage that you currently have. And I think I mentioned last time there's some old wives' tales. Well, there's lots of them that are irrelevant. But a refinance basically is designed to either allow you to take some cash out of your home. Not always the best thing to do, but it is available. It is your home. You own it. So you should be able to take some cash out. Or to lower the interest rate. And sometimes we help people shorten the term. Right. So
we went through term.
Yeah. Oh, was it? Right. Yeah. So in other words, if they have a 30-year mortgage now and they have 28 years to pay, and we want to put them on a 20-year repayment, that'll increase their mortgage payment, but it will dramatically reduce the amount of interest they pay.
Okay.
Is that a lot?
Yes, that was a lot.
Can we just cut that out?
So refinance is just literally refinancing your home.
Yes.
If it doesn't make sense to us, we will not encourage you to do it. I promise. We will always shoot you straight, best interest in mind.
Hard stop on refinancing when it doesn't make sense.
Absolutely. And we'll wrap it up with one. I've been working on how to say this word. Amortization?
That's close enough.
Okay. Amortization?
You want me to help you?
Yeah.
So amortization.
Okay.
Is the
amortization?
Yep.
Okay.
Again, back to the mortality.
Right.
Amortization is the term, how long the loan goes. So
Right.
term and amortization are, well, amortization is how it breaks down, and it's the schedule of how the monies are paid back and split out in between the interest and the principal.
All right.
I think we've got some good ones out.
Thanks. Let us
I
know
think
whatever
we did, yeah,
questions you have.
We're just running ideas for next one. I think we're gonna want to do myths.
Oh,
Like
Mythbusters.
debunk, Mythbusters.
Yeah.
It'll be fun. So if you guys have any myths that you've heard or you're curious, like do you actually need 20% down to buy a home? What was another one? Do you need a credit score to buy a home? Any myth that you or any questions kind of that you have that you're just not sure, we will debunk them for you. We also have, shameless plug, a YouTube page up, Michael J. Mortgage. And now I feel like a YouTuber being like, subscribe, comment up here. But please do that. We're trying to drive traffic over there. Share with your friends. I hope you learned something cool today, and we will see you soon.
Peace
Peace out.
Thank you.
Let me do it at the same time.
All right.